Hello everyone, this is Evan from the Trade Risk here on Thursday, February 18th with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then look at some individual names to finish off the video. Now, it's been a strong week for the bulls. We've had a 3-day furious bounce here starting from Friday, and then all this week, holiday shortened week with Monday being President's Day, we have continued to bounce higher, gapping up above the previous day's close and then trending higher all day, not filling those gaps, but moving higher all day. This was the first pause that we saw, down 41 basis points today, and arguably much needed after the move that we've seen off of these lows last week. So if we look here at where we've come from, you can see we've covered a lot of ground and we've broken through resistance. We've broken through this major area here around 187.50 in the SPY, and you can see we're getting to the top end of this range that we were in last week around 194.50. Now, we haven't quite hit it. I know some people are looking at perhaps this trend line here and to say that this is still hanging in and containing price. However you want to draw it, I think it's pretty clear that we're in a general area where we should expect price to hesitate, to perhaps react to as it starts to get up near these previous pivot highs where we found supply and pivots last time around. Looking at the weekly chart, you can see again, as demonstrated here, these have been the weekly highs, going back for pretty much all of 2016. So it's been a strong move. I think today extremely constructive, though, all things considered. I know many people seem to be waiting for sort of this retracement to short this market, given how quickly it's risen just in a few days. And I certainly feel the temptation too as well to sort of aggressively look for those shorts. But the market's not giving it to us. I mean, we see this brief down day today, but really you'd have to think that this is pretty damn constructive, only giving back less than 0.5% after a 6% or whatever this is on as far as a percentage basis on rally. I think this is really constructive. Now again, tomorrow we could come in and completely roll over, and I think that then would be more of your signal to get short. I don't think you really have it here. I mean, it is, I guess if you're bearish, it is constructive that we couldn't take out yesterday's highs. We didn't continue. So I'll give the bears that. But for now, I think if we move sideways with some inside days or just a few days of choppy action above 190, I think that's extremely bullish and sets up the bulls for maybe a continuation or at least some type of retest of these highs later in the month of February. So again, we'll have to see how it all unfolds. I'm not trying to predict that. Anything can happen here, but closing the week tomorrow is going to be an important sign to see how strong these bulls really are. So do we see continuation lower tomorrow? Do we see us head back to the highs? I think that should give us a lot of clues as to how real and how true this bounce really is. So for me, and how we've traded it, we have been long throughout this bounce, certainly not as much as we would have liked, with just very lightly treading long on the past few days here. So for us, I think I'm still looking at this as a constructive move, look at this crossover that's going to be happening in the next few days, so long as price can hang in there. So again, all this is to just reiterate the same sort of thesis here, that I think you do need to believe in this rally for now until you get a sign not to. And I think so long as we hold above 190, that is your upper level of sort of momentum to sort of gauge this market. Now, if we look at some other markets here, IWM not quite to the top end of its previous range either, but you can see trying to get that crossover, some of these fast moving averages trying to get back in bullish alignment, not quite there yet. Gave back similar as a percentage basis today in the IWM and battling that $100 round number. This area right here, 101, see where all of these highs come in? That's sort of where we've seen the stall out now. So that's going to be an important level for us to challenge and break above if you're on the bull side. And then the Qs were certainly the weakest today. Again, from the technical perspective, though, not too much to worry about. They were the weakest today, but in the big picture, it changed nothing really. We gave back. We tried to push up, tried to continue higher. That failed, and we closed on the lows. So not a very good-looking candle, but we're above $100. I think that's a very important level. So again, I think you could even pull back tomorrow, but as long as you stay above $99.50, $100. I think you're still constructive here in the Q. So we'll have to see how that all unfolds going forward. Now, if we look at some other markets, TLT started to catch that bid higher again. A nice pullback to the 20-period moving average. Saw some buyers show up and then continuation higher. Very constructive, textbook bull trend, kind of dip buying procedure there. So that looks really good going forward. Gold, same comment here. Really overbought. This one only pulled back to the 8-period exponential moving average, and that's where buyers stepped in. So some strength, some pent up demand still here in gold, despite a lot of people may be saying that this has run up too far too fast. The market's still showing a lot of strength here. I would not want to fight it, I was really hoping that this could move sideways a little bit longer to get a more calculated, defined entry. That didn't happen, so this one has gone without me. Silver, similar situation, although as the story has been this year, it's been shadowed by gold. It hasn't been performing as strongly as gold has been, but it's still moving. It's still above the 8-period EMA, so very constructive here as well in the metals. So if we look at some of the oil, tried to continue its gains today. It failed at highs, rejected at making new highs, closed on the lows today. So technically not much had really changed here. It's in the middle of this range. You should expect chop. You should expect lower prices to fail, higher prices to fail, a lot of indecision, overlapping bars. That's what you're in store for if you're trying to trade USO right here. I think you want to stick to the extremes when you're inside this type of choppy range. Flat moving averages, just doesn't look like something that has high directional probability, so I'm going to stay away from that. UNG, now this is interesting here as it's making new closing lows on the year, and going back several years. So UNG taking out December lows, closing on the dead lows. This is going to be interesting to see if this continues lower. I did not take this short just because it is a bit stretched. And I just want to see how this really plays out here. For you contrarians who maybe are looking for some type of reversal play, see if tomorrow this one really gets beat up or gaps lower or breaks lower and then sees some type of hard reversal. I think your line in the sand here is pretty clear. Get back above $7, $6.95 or so. Then you can get long with some defined risk. But for me right here, it looks extremely vulnerable. Downtrend still in control there. Now, if we go to some sector analysis, hands down, the standout today is utilities, up 1.64%. Maybe I'm a little biased because we are long this. We got long this at the end of January. We were sitting in this trade for some time throughout this pullback, but today started to see that continuation in there. So that's very constructive. On my scans that I was doing earlier, really just dominated by utility names, and they all seem to be breaking out today. So very constructive. Look to see if those continue higher. 46.75 or so. These recent highs are going to be the big ones to have on watch going forward. Other than that, the only other real standout, IYR, that one certainly, that continued higher. Staples hanging pretty tough today. It's battling with this prior resistance band here. So, the staples, defensive sectors, those continue to look well. And everything else still kind of just meandering along. I think industrials still look interesting on a recent sort of relative basis here for the past couple of weeks. And I also think that, energy certainly saw its bounce, but it gave back some at this prior resistance today as well. So keep an eye on it. No other real standouts today except for the utilities and maybe lesser extent so the staples. Now let's look at some individual names here. Apple A bearish looking candle here for sure in Apple, especially after this nice 2-day move it had, these solid green bodied candles emerging from this healthy base that it did put in. Maybe it needs to go sideways here a little bit longer, but I think this is constructive action in Apple. I like how it's holding up down here. 93 or so is a clear line of defense there where the bulls have stepped in, so keep an eye on that in the future. Google, same thing. All these FANG stocks as they are have gotten we're under some pressure today. Google reversing yesterday's gains. You can see, is this going to be just a big bear flag that ultimately breaks lower? We'll have to find out. Right now you got maybe some rising trend line support there. You got 685 support way down here, so it still looks like it just needs more time. So let's see how that one pans out. 4.5% down day in Netflix. We posted this chart yesterday showing this big band of resistance here and showing how that we rallied right into it yesterday. That's always going to be a difficult spot for the market to challenge, to break above, especially in the first pass. I think today which would have been a true sign of strength is if we were to just continue higher and completely ignore this band of resistance here, which acted as support. That would be interesting, but we really do see exactly what we would have expected to see. So let's see. Again, technically didn't change too much. Let's just see what happens moving forward. Amazon, similar situation. It looks similar to almost Google here. Gave back most of yesterday's rally. Let's see what it looks like. Big bear flag. Probably just needs more time. Whether or not that is a bear flag, we'll have to see how it all pans out. Tesla giving back some of its recent earnings rally that it's had. It's got this big breakdown area right up here, right around 180 or so. We'll see if it can get back up there and retest it, but still looks very vulnerable. Type of bear flag, the way it's sliding back up there, just like Google, Amazon, and a couple of those other names. Facebook, similar situation. It's just moving sideways here, down 1.6%. You can see it's got a lot of supply to the left of it. Needs to get back above 107 or so to turn healthy there. And Twitter, which has been the turnaround story now, look how much strength has come out of this recently. It failed to hold these lows down here and shot right back up. This looks good. Nice little failed breakdown here. I'm sure it could use a rest after coming so far so fast at this prior sort of pivot highs area here from January. So we'll have to see if this pauses in the near future. But you can see finally starting to get some bullish alignment here on some of these fast moving averages. So that looks constructive. Finally, we'll look at Gopro, which gave back some gains today, but this is once again similar to Twitter, finally starting to look decent, emerging from this base here. And I mean, again, everybody knows this is down 70% in matter of months, so some type of rally here, not too surprising. Fills this gap perhaps in the near future, wouldn't be so surprising there. In GoPro, last but not least, we'll look at Alibaba, and this one had this nice gap up here from Tuesday of this week to start the week off. Never looked back from it, holding high and tight, so perhaps early signs of a bottom here, which ultimately would be a double bottom, higher low here in the bigger picture. So we'll have to see if that can actually hold true. Early to say for just right now. And that's it. That's all I have for today's video. I hope you enjoyed it. If you do, subscribe to the video, bottom right hand corner. As always, thank you for watching, and I will catch you next time.